Hello, friends. Today we're talking about an issue that affects every single person who receives Social Security benefits. Many people believe that the monthly payment they receive has already been calculated correctly and that there is nothing they can do to increase it. Unfortunately, that belief is costing countless Americans a substantial amount of money month after month. There are several specific circumstances, along with certain documents, that can actually raise your Social Security benefit. Some of these opportunities apply to people who are already collecting benefits, while others apply to individuals who have not yet filed. In nearly every situation, the Social Security Administration does not contact you to tell you that additional money may be available. It is your responsibility to know what to look for and where to find it. Today, I'm going to walk through 5 of the most important situations, explain exactly what you should review, and show you the steps needed to take action. Stay with me all the way to the end because I'll provide a complete checklist you can use yourself. Before we begin, make sure you subscribe to the Frank American and turn on notifications. Social Security rules, procedures, and benefit calculations are updated regularly, and when those changes happen, the SSA does not personally call beneficiaries to explain what has changed. The people who stay informed are often the ones who protect their benefits and avoid missing out on money that belongs to them. Subscribe now and let's dive right in. Before discussing each individual situation, it's important to understand how the Social Security Administration calculates retirement benefits, because once you understand that process, everything else becomes much easier to follow. Your Social Security retirement benefit is based on the 35 highest earning years of your career after those earnings have been adjusted for inflation. The SSA reviews those 35 years, calculates your average index monthly earnings, and then uses that figure to determine the amount of your monthly benefit. If you work fewer than 35 years, any missing years are automatically entered as zero-income years. Those 0 years can dramatically reduce your average earnings calculation. According to SSA estimates, a single year of earnings that should be included but is missing can lower a monthly benefit by roughly $100. That may not sound like much at first, but adds up to approximately $1,200 every year. Over retirement lasting 20 years, that one missing year could cost around $24,000 in total benefits. If your earnings history contains 2 or 3 missing or inaccurate years, the financial loss becomes even more significant. Now let's examine the 5 situations where these problems most frequently occur. The first situation involves earnings record errors from the 1980s and 1990s. This is one of the most common issues and affects a large number of people who are currently receiving Social Security benefits. During those decades, payroll reporting systems were far less automated than they are today. Employers often submitted paper documents to the IRS, and the information then had to be transmitted to the Social Security Administration. At multiple stages of that process, mistakes occurred. Numbers could be entered incorrectly. Names could be misspelled. Forms could be misplaced, and entire years of earnings could disappear because paperwork was lost or filed incorrectly. The farther back you go in time, the more difficult it became to identify and correct those errors. As a result, many mistakes remained in the system and were never fixed. If you worked during the 1980s or 1990s, log into your Social Security account at ssa.gov and carefully review your earnings history year by year. Compare the information shown on your statement with any records you still have available, including W-2 forms, tax returns, pay stubs, or other employment documentation. Pay special attention to years where the earnings listed are much lower than what you remember earning. Also look for any years that show 0 earnings, even though you were actively employed. Both situations may indicate an error that should be corrected. If you discover a problem, you can request a correction by filing Form SSA 7008, which is a request for correction of earnings record. The form is available free through the Social Security Administration. Include copies of supporting evidence, such as W-2 forms or tax returns that verify the correct earnings amount, and submit everything to your local SSA office. Processing times can range from about 10 days to as long as 90 days, depending on complexity of the case. Once the correction is approved, the SSA recalculates your benefit amount, and any increase becomes a permanent part of your monthly payment going forward. The second situation affects women who left the workforce to raise children. This group is often impacted more heavily than almost any other by what is known as a zero-year issue, and many people are completely unaware of how much it can affect their benefits. When a woman leaves employment to care for children, whether that break lasts 2 years, 5 years, or more than a decade, those years generally produce no earnings on her Social Security record. If she ends up claiming benefits with fewer than 35 years of covered work, every year spent out of the workforce becomes a zero that is included in the benefit calculation. For example, a woman who worked for 25 years and then spent 10 years raising children with 10 zero-income years included in her 35-year earnings history. Those zeros can substantially reduce the average earnings figure used to calculate benefits, compared with someone who worked continuously for the full 35 years. There are 2 important points to understand. First, if you later return to work and earn more money than you did during some of your earlier working years, those stronger earnings years can replace weaker years in the SSA's top 35 calculation. Your eventual benefit should reflect those higher earnings. Second, and this is a part many people overlook, if you're already receiving Social Security and continue working part-time, the SSA reviews your earnings record annually. If your recent earnings are high enough to improve your benefit calculation, the agency automatically recalculates your benefit and applies the increase retroactively to January of that year. If you have been working part-time while receiving benefits and have not noticed any increase in your monthly payment, it may be worthwhile to contact the Social Security Administration and ask whether your recent earnings have been reviewed and whether a recalculation is currently pending. The third situation involves self-employed individuals, including freelancers, independent contractors, small business owners, and gig workers. This group faces a unique earnings record problem that is surprisingly common and often goes unnoticed for years. When you work for a traditional employer, the company generally handles payroll reporting and submits earnings information to the IRS and the Social Security Administration on your behalf. However, when you work for yourself, the responsibility falls directly on you. Self-employed individuals must report their income correctly and pay self-employment taxes. Historically, a significant number of self-employed workers have unintentionally underreported income, entered information incorrectly on tax forms, or in some years failed to file the necessary paperwork altogether. Those reported mistakes can have a direct impact on the earnings history that Social Security uses to calculate retirement benefits and may result in lower monthly payments than the person would otherwise be entitled to receive. The result is that there may be years in which your actual income was quite substantial, yet your Social Security earnings record reflects only a small portion of what you truly earned, or in some cases, shows nothing at all. If you spend any time working for yourself, especially during the 1980s, 1990s, or the early 2000s, it's a good idea to access your earnings record through your account at ssa.gov and compare it carefully with your tax returns from those years. Pay close attention to the net self-employment income reported on your tax filings and compare those figures with what appears on your Social Security earnings history. If the numbers do not align, there may be an error that can still be corrected. The same correction process applies here. You can file Form SSA 7008 and provide copies of the relevant tax documents that verify your actual income. Once submitted, the Social Security Administration can review the information and update your earnings record if a mistake is confirmed. There is also an important detail that self-employed workers should understand. In 2026, the amount of net earnings required to earn a Social Security credit is $1,890. You receive 1 credit for every $1,890 in eligible earnings, up to a maximum of 4 credits per year. If you currently earn money through freelance work, rideshare driving, delivery services, consulting, contract work, or any other type of gig employment, make sure you file the appropriate tax forms every year and pay self-employment taxes when required. Every year that goes unreported can become another zero-income year on your Social Security record, potentially reducing future benefits. Another important situation involves people who continue working after they have already claimed Social Security benefits. This is one of the most overlooked opportunities available to current beneficiaries. Many people assume that once they begin receiving Social Security, their benefit amount is locked in permanently. In reality, if you continue working, whether full-time, part-time, temporarily or seasonally, your new earnings continue to be added to your Social Security record. Each year, the SSA reviews those updated earnings and compares them with the earnings already included in your highest 35 years of work history. If the newly reported year is stronger than one of the lower earning years already being used in the calculation, the weaker year can be replaced. When that happens, your benefit amount is recalculated and may increase. The Social Security Administration is supposed to perform these reviews automatically if your earnings result in a higher benefit. The increase is generally applied retroactively beginning in January following the year in which the earnings were reported. However, the process does not always happen as quickly as expected, and some beneficiaries who qualify for an increase do not immediately see the adjustment reflected in their monthly payments. If you have continued working during the last year or two after claiming Social Security and your benefit has remained unchanged, it may be worth reviewing your account. Log into your My Social Security account and confirm that your most recent earnings have been added to your record. If the earnings are shown but your benefit has not increased, contact the Social Security Administration and ask whether recalculation has been completed using those earnings. If your latest earnings are not showing up on your record at all, that could indicate a reporting issue that deserves further investigation. There's also an important situation that applies to many veterans who served on active duty between 1957 and 2001. While this affects a smaller portion of beneficiaries, the impact on monthly benefits can be meaningful. Veterans who served during this period may qualify for what the Social Security Administration refers to as military service wage credits. These credits are additional amounts that are added to a veteran's earnings record to recognize periods of military service. The way these credits are calculated depends on when the service took place. For many veterans who served between 1978 and 2001, the SSA generally adds an extra $100 of credited earnings for every $300 of active duty pay, up to a maximum credit amount of $1,200 per year. For military service that occurred between 1957 and 1977, the system was different, with a flat credit of $300 per calendar quarter of active duty service. The important point is that many veterans have never reviewed their earnings records to verify that these credits were applied correctly. If you served during those years, log into your account at ssa.gov and examine the earnings shown for your military service period. If the reported amounts seem lower than expected based on your active duty pay, contact the Social Security Administration directly and ask specifically whether your military service wage credits have been properly applied to your record. In some cases, correcting those records can increase future or current benefits. Now let's go over a simple checklist of actions you can take today. Start by logging into your My Social Security account at ssa.gov. Open your Social Security statement and carefully review your earnings history year by year. Look for any year that shows zero earnings, even though you were employed. Also pay attention to years where the reported amount appears noticeably lower than what you remember earning. Once you've identified any questionable years, compare them with any supporting records you still have available, including W-2 forms, tax returns, pay stubs, or other employment documentation. If you find information that does not match, download Form SSA 7008 from the Social Security Administration, attach copies of the documents that support your claim, and submit a correction request. If you are still working and your benefit has not increased within the past year despite additional earnings, contact the SSA and ask whether your recent earnings have triggered a recalculation of your benefits. Veterans who served between 1957 and 2001 should also contact the agency and specifically ask about military service wage credits to make sure those credits have been properly included in their earnings history. Remember, your Social Security benefit is based on a record that was built over many decades using information submitted by numerous employers, tax filings, government agencies, and in many cases, manually processed records. Mistakes can occur. Earnings can be omitted. Entire years can be recorded incorrectly. Every error that gets corrected has the potential to increase your benefit permanently, which is why taking the time to review your record can be so valuable. If you found this information helpful, subscribe to The Frank American and share this video with someone you know who receives Social Security benefits. A simple review of an earnings record today could make a meaningful difference in someone's income for years to come.